all over the country. Talk about some of the strategies that you see that are really winning for them.
Well, COVID has changed everything, right? I mean, the US dollar has been expanded by 7% a year for the last 100 years. So if you just sit in cash in the bank, you're being devalued. So no wonder that real estate has gone up 50% in South Florida, 42% I think on average since COVID, because we expanded our money supply by that amount. So that money's got to go somewhere. So you start looking at what is a scarce asset. Well, real estate is a very scarce asset in many cases. So location is really what wins the day when it comes to real estate. So I think what a lot of us should be doing right now is, and right now interest rates are a little bit high, so managing debt. But if you can acquire debt, if you believe that real estate is going to continue to go up in value because the cost of shelter will continue to go up because this country is going to continue printing dollars, then using some debt to acquire real estate, even at higher interest rates, could make some sense, but it has to be managed from a cash flow perspective. So that's the trick. But there are some resources out there. I mean, I think one thing that I would mention that I've seen guys utilize, and I do it myself, is the 1% rule. Does anybody know what the 1% rule is? Nobody heard of that? So I don't own real estate in Miami, besides the house I live in, from an investment standpoint, because it's very hard to cash flow. So I started looking at markets where I liked what was happening. So where's an opportunity right now that's interesting, a lot like Austin, Texas. Austin, Texas had a lot of remote workers move to Austin, and then what happened now, there's almost 13,000 Airbnb properties in Austin, and the Airbnb market has plummeted by 40%. So there could be some opportunities if you start looking at some different resources and looking at different markets and say, okay, where's the opportunity to buy a house price that makes sense? In Miami, real estate values are still at an all-time high. And so we have a very diversified economy. But I bought some property in Chattanooga, Tennessee, because no state income tax. You have a lot of people moving there. It's not Nashville, but it's like a third-tier city in Tennessee. It's in the Sun Belt where people historically move to. So I think when you start looking at demographics, you start looking at where companies are moving to, it's not necessarily in your hometown. There's a great book called Long Distance Real Estate Investing by David Green. Bigger Pockets. If anybody knows the Bigger Pockets podcast, that's a great resource for real estate. They have the other related podcast called On the Market that I listen to, and there's some other real estate analysts that you can follow. So the 1% rule basically is if you can rent out the house, so let's say there's a house you can rent out for $3,000 a month, and that house you can buy for $300,000. So 1% of the cost of the house on a monthly rental basis, then generally speaking, as a rule of thumb, it's going to be a decently cash flowing property. So if you're looking on Zillow in Atlanta, Georgia, in Buckhead, and you see, okay, this property to rent out for $3,000 a month, but it's going to cost me $900,000 to buy it, move on. It's not going to be a generally good cash flowing property. And there's other markets where there's more cash flow and less appreciation. Miami, South Florida is one of those markets where you get less cash flow and more appreciation. So you have to look at what are you trying to do? Are you trying to go for the long term, or are you trying to get cash flow, depending on your situation? My situation, I'm still working, so I'm not really so concerned about cash flow right now, but I want a little mix of both. So the 1% rule. Another method that is really popular too is BRRRR, B-R-R-R-R. So buy, rehab, rent, refinance, and repeat. So it's kind of a little acronym for that. Because when you pull money out of real estate, and a lot of us, we all live somewhere, so we understand residential real estate inherently, and you've seen private equity firms buying up a bunch of real estate also. So that's probably a good sign. When BlackRock is buying up single-family homes and BlackRock's buying up, and starting an ETF to buy Bitcoin, probably a good sign that they know what they're doing. So anyway, the 1% rule is a good one. The BRRRR method is something else. And I think don't try to do everything. Like some people say, I'm going to invest in retail centers over here. I'm going to invest in hotel development over here. We all get excited by that new shiny thing. I think it's very important to focus on one thing. Like really focus on one thing in one market, become an expert, and scale that market. And when you refinance, you pull the money out tax-free. And when you can also sell to the 1031 exchange in the tax code, you can also transition that property, defer the capital gains taxes, so you pay nothing at that moment, and you move into the next property. So there's lots of strategies out there. There's the last thing I'll say, so I don't want to run too long here. There's the Real Estate Investors Association. It's a nationwide Real Estate Investor Association, RIA. I'm good friends with the person that runs the one down here in South Florida. His name is Danish Dave. The guy is the smartest real estate investor and finance person that I know, and I'm happy to connect any of you with him.